Hi, this is Abid Hussain Malik from Abid Financials. Today we are going to discuss Section 4, the name year-end of study material QuickBooks Online Level 2. And in this exam, there will be 8 questions. And there are 3 main topics which we shall discuss in details in our video. The first one would be the troubleshoot, the tools, and prepared and file 1099 forms, and third one is budgeting. So these are 3 specific and very important topic in this video, and we shall discuss all these topics one by one. So one thing you should keep in mind, this video is in details, and I do not want to skip anything else, because whenever you will be able to take your exam, every time the question shall be changed. So I try to include each and every materials, and it would be usable for you if you will be able to take your exam now and after 1 year until this policy is changed. So this video can be a lengthy, but it is useful for every aspect. So let's move to our next. I would like to introduce myself. I am Abid Hussain Malik, a CPA top rated plus freelancer on Upwork and trainer of QuickBooks and Zero. And I have more than 10 years of experience in this field. If you need any help or need any assistance or have any question, you may let me know at email address info@abidfinances.com, or you may contact me at my WhatsApp number. This is given here, and I also provide bookkeeping, accounting, payroll, taxation services to the worldwide clients, especially the USA, and I also deal with the certification services of the all QuickBooks and the Zero, which are given here. Let's move to our next topic. Our first topic is troubleshooting tools. First of all, we shall know about the troubleshooting and how these tasks are set up. So in the accountant version, you will see the books review tab in the left navigation bar that will guide you through the steps needed to review any discrepancy in transactions to make sure balance sheets and P&Ls are complete and accurate. You will encounter some tricky situation to resolve, and QuickBooks is there for you to do. And let's look tools that are available for the troubleshooting. So prevention is better than cure, addressing unresolved undeposited funds and writing off the invoices, creating the journal entry. These are the main 4 main topics which shall be discussed in books overview. So let's move to first topic, that is create the prevention is better than cure. And many discrepancies in financial statement arise when account receivable and payable bulk flow are not followed correctly. So this is a main cause not following our workflow. If bank deposit is reported without being linked to relevant received payment, undeposited funds in income account will be overstated, and account receivable will be overstated if the invoice is not marked as paid. Otherwise, if we go to the bank fields and add them directly and do not link them, so it's a problem we shall face. If an expense is created without being associated with an existing bill, both account receivable and payable and expenses would be overstated. If issues like these are spotted during year, it can be straightforward to correct them. In mismatching or incorrect categorization, transactions can be identified and mistake corrected. If you find out more about how to make this correction, and these are discussed in banking, sale customers and expenses and vendor course. And next, at the year end, it can be more difficult to track down the correct transactions in the same way. So there are a number of tips and tools that used to ensure financial statements are detail accurate, and let's take a look. Getting it right the first time, and it really can't be said, prevention is key. And client's account accurate and issue the free tools that you are looking at here can help with these issues and to arise. If at year end you spot recurring issues with a client's account, use it as an advisory or training opportunity with your clients, ensuring they can use the correct workflow and understand the effects of getting them wrong. So next is addressing unresolved undeposited funds. So this is other issues, sometimes called payments to deposit, is used to temporarily record payments that have been received before their deposited. Bank match to the transaction and paid. If the accounts grow throughout the year, indicates these are not being recorded or processed correctly. Further back issues, harder they are to fix and good idea to take a look at predictability. What caused this issue? If the undeposited funds account continue to grow or you spotted unresolved, the first step is to understand how they go there. This requires investigation and it may not always be possible to find out all detail of what happened. Common causes of unresolved undeposited funds includes the payment being recorded not deposited correctly, and duplicate payments are being created in QuickBooks for same payment, and a payment being recorded incorrectly. So these are main reasons. Understand how the issues has arisen will help determine how to resolve them. Can the workflow be corrected? If the issue is the result of error in workflow, and you might be determined to point workflow breakdown and correct it. For example, common workflow breakdown might be: payment for an invoice has been recorded and posted to undeposited funds, yet no deposit is created. When the transaction comes in through the bank feed, it gets posted directly to income. So this is a wrong thing. It should be hit to our QuickBooks automatically create a bank deposit for the payment, but this is not linked to the invoice. Customer record does not show the payment was received. So these are the main errors which are found. To resolve these one, open the automatically created bank deposits, select the correct payment and delete the line from add funds to this deposit section. This keeps the deposit for correct amount but correct the workflow by associating the deposit with the customer payment. For more best practice workflow and undeposited funds, take a look on these links. Can the unresolved payment be deleted or voided? In case of duplicate transactions being recorded, it may be possible to delete or void the duplicate or remove the balance from undeposited funds. This should only be done after bank reconciliation is completed and for the period and are certain that transaction is incorrect. Both deleting and voiding duplicate payment remove the accounting transaction. Deleting duplicate transactions and removing from customer history, and voiding the duplicate payment leaves customer history as $0 transactions. If the transaction was in a previous period, deleting voiding duplicate would affect the previous balances and the prior period financial statement. For this reason, these options should only be used after you have investigating thoroughly and these implications have been carefully considered. What other step can be taken to resolve these issues? If after thorough investigation the cause of issue cannot be determined, it is agreed with client that payments need to be write-off. Transaction will need to be resolved within QuickBooks to ensure the undeposited fund is not overstated. To do this, select New and open the bank deposit screen. Select the payment to be write-off. You could do this in monthly or yearly batches if clearing out a large number of old and unresolved transactions. Date and deposit to the date of original deposit and end of the period they are clearing out. in the add funds to this deposit section, select the prior period adjustment, bad debt or similar expense account. Add description explaining why you are writing off the payments, total payments selected, and add this as a negative amount in the amount field. This creates zero transactions, and that would not affect the bank balance but clear undeposited funds and clear the transactions to the account indicated in add field section. So this is the main thing. If you have old balance in the bank deposit undeposited funds, so you can clear them by this way. This is a bank deposit account. We shall go to the new and create bank deposit, write the date, and here you shall select the item, select the payment included in this deposits. All these items would be selected, and these are the total items. And here add the fund to this deposit, you shall select bad debt account because these payments has not been received yet, so we are creating a bad debt for this one, and so you shall save, and ultimately it will create a zero balance because this is a total balance and total is 104, and this is written in negative. In other case it would create a bad debt expense, and so it's in negative. Don't let the problem go unresolved. When there is an issue with undeposited fund, you may first see as growing balance for the account on balance sheet. When you open the deposit section and see all transactions listed, corresponding issues with undeposited funds may be found when you review the transaction journal of sales account. If deposits are being directly posted to them, then they should not be there with the fund. You may also identify issues when reviewing accounts receivable. If these balances are not correct, it may indicate potential issue with undeposited fund. Whichever way unresolved undeposited fund are identified, most important thing is these should be resolved and help ensure these funds amounts are correct moving forward and providing your clients with accurate information and good for the decision. When investigation issues with funds, you may also identify training area of your clients. This can help to reduce issues in future. Writing of invoices. So there are different ways to resolve these issues. You may create the writing of invoices to clear out your deposited funds. So we shall discuss different method here. Using the credit memo to write off the invoices. No one like having to write off bad debt, but at year end it is used at year end and during period end review. At some point you are likely to come across unpaid invoices and wouldn't ever be paid by customer. This could be because customer went out of business and that your client has informed you that expecting payment is unrealistic. It's important to know how to write off these invoices so your client's account receivable is accurate. Best way of writing off invoices is by using a credit memo, particularly when invoices contain taxable items, is from a closed period, and if you need to be able to run a report to show what has been written off. Let's get an overview, 3 key tasks, and the workflow for working corporate credit card before dive into the details. How we shall set up this one. First, you need to do some work to prepare for setting up a credit memo. To do that, add an uncollectible or bad debt expense in a chart of accounts, and also add a service or non-inventory item posting to that account. So these are preliminary setups you need to do this. This is bad debt account. You will create the new accounts in the chart of accounts, and then here you will edit, write the name bad debt, make this as a sub account, general business expense, and here this is showing here, and here you will see bad debt, and item type This is a preview of items you will create in your inventory item list. Here the type is services, and the sales in income account it would be the BADED. Then in business expense account you will select BADED account. In a purchases it would be also be a BADED account, and then you will hit the save button. Create a memo. For creating the memo, how you will do this one? When adding the dates of the credit memo, consider the period in which invoices is dated. For example, if you're writing of invoices in closed period, consider using a date in the current period so you do not change prior period number. In product or service column of memo, select the BADED and enter the amount you're writing of as a positive number. Uncheck the text box if there was a no sales tax on the original invoice. If no sales tax, then uncheck. If there sales tax, then we shall check this one. So this is a main difference. If there was a sales tax on original invoice, leave the text box checked. So this is a main sequence. This will reduce the sales tax payable as date on the credit memo. As the date of sales of credit memo, it will reduce the balance of sales tax. When writing of an invoice, be sure to consider the sales tax implication when deciding whether to make credit memo taxable or not. It should be considered. So I am going to here credit memo. This is, and you will click the customers and the credit memo dates, and here you will select the BADED account and the amount is positive. If there was tax was charged, I shall select tick. If not charged, then it will be blank. Apply the memo. Once the memo created, it should be applied against invoices that needs writing off. It should be applied, is very important. Create a new payment. For applying this one, you shall create a new payment, selecting customer and invoice that you want to credit memo to apply to. You can select the credit memo and apply it against the invoice. When you will create the new payments, at the right side it will show pop-up option, and then you will add them. Invoice tab, the sales center, you will see that this invoice is no longer outstanding, then it will be resolved. So this is a received payment. Here in the description you will select the invoice, the date, amount, and here you will add credit memo, and it will nil off your amount, and ultimately the outstanding amount would be 0. Run a report. If you need to run a report to show what has been written off, go to the report center and run a sales product detail report. Filter to show BADED services item and set the date frame as needed. So sales by product or service details. Here this is the report, this is the BADED, and here in the filter items you will just only select the BADED, and then it will be shown here you have applied these credit memo. Turn off automatically apply the credit setting. When using credit memo to write off invoices, you should consider whether or not to turn on setting automatically apply the credit memos. This is turned on or off using automatically apply credit toggle in the advanced tab, account setting and general gear. This is a accountant setting in advanced tab, and you will see there. So if it is switch on, QuickBooks apply credit to the oldest invoice first rather than looking an exact match. So this is otherwise like a demerits of switching on this one. This can save time if you are clearing out old invoices, and but if you have multiple outstanding invoices and you want to choose which invoice the credit will be applied, credit memo may be applied incorrectly. So this is the main demerits of applying on. If this is switch off, you will have to manually apply the credit to an invoice. So this is the main thing. If you want to apply the credit on sequence basis, holder basis, so it should be switch on, or otherwise it should be off. When you open the receipt payment screen and enter the customer name for whom you know the credit should exist but do not see any transaction, this may indicate automatically applied credit setting is checked. So what are the tips? Other methods of writing of the invoices. There are other ways for this method. Writing of invoices tool available in accountant version. Write off balances as of the original invoice date by creating a discount line and remove the account receivable balance. However, it does not adjust the sale tax, so it should not be used for invoices containing a taxable item. So this is like a limitation for there. It is not usable for your involving the sales tax. So you may also need to use a journal entry to write off the bad debt. This is another method. You shall look at that later in this course. And the third one is creating a journal entry methods. Now let's take a look how journal entries can be used to troubleshoot at the year end. Journal entries are the ways to post debit and credit correctly in accounts in general ledger and can be useful at year end for correcting errors, writing of invoices, entering reversing the accruals. So this is like different ways to resolve these one. And recording the depreciation of an assets. So these are the usage of our journal entries, and enable you to adjust the accounts by forcing the books to balance in a specific way, so should only be used as a last resort. Journal entry is used as a last resort. Before you dive into how to create them, let's look at some rules for creating journal entries. Total debits must be equal to credit. So this is its main rule. It wouldn't save if these are not equal. It can't use a product or service item in a journal entry. So this is another rule for it. When posting the accounts payable, you must specify a vendor, and it can't mark as amount as billable to the customers. You cannot so this cannot be done with the journal entry. You may use multiple accounts receivable. So this is another function, or account payable in a same journal entry. What are the tips? A word of warning: you should use journal entries in QuickBooks with extreme caution, as they do not use QuickBooks workflow and can lead to incomplete, inaccurate reports. Forms such as invoices and bills link transactions together, allowing for better tracking and easier reconciliation. Journal entries do not create these links, and making it harder to manage account receivable and payable. QuickBooks automate features such as payment reminder, automate matching of transactions, rely on using correct form. Journal entry bypass these features, leading to the more manual work. In short, journal entries can be very useful in specific situations. You should be used by accounting pros. If the accountant would use, that would be good, and the owner should not use this. This is discouraged for the owner. Adjusting journal entries, how this would be made, we shall know about this one. While generally discouraging for day-to-day transaction, journal entries are typically used for end of period and end of year adjustment. Adjusting entries can be made to record accrual or non-cash transactions, and such as depreciation. You can also use them to fix minor errors before producing financial statement. Both you and client can create journal entries. Both people can create the entries, but as an accountant you can design entry as an adjusting entry to differentiate entries from your client. To mark journal entry as adjusting, check is adjusting journal entry checkbox at the top. You shall only see this checkbox if you are signing into accountant version. Through QuickBooks Online Accountant, you can also run the adjusting journal entries report from the report center to see these. When creating journal entries, remember you can add attachment to them, and you can, with other transactions, this can provide exploratory information such as schedule or report, or which can be helpful when returning to an entry at a later date. If you do not have the primary sub-account bank feed connected, you can still record the payment to this sub-account, and but a pair transaction would not show. It is instead, when the payments cleared in the bank account, it would go to the primary sub-account. You would see the payment, and you reconcile the parent credit card account. It's important to note that you do not have to connect primary account to the bank feed, because there are times when it's not possible to do so. Writing of accounts receivable and payable, and it may be that during year end, identify small account receivable payable amount that cannot be recategorized using usual workflow. In these cases, and when cleanup a client's account, journal entry should be used. For example, several invoices with only a small amount remain on them. Your client may decided to write off and decided to write them off rather than chase them down. So in this case, you could create a journal entry crediting account receivable and debiting the accounts bad debt. You need to apply these to the relevant invoices in the received payments, and the invoices should be checked and journal entry added as a credit, creating a $0 transactions and clear out the old invoices. So this is the main workflow that works for creating these things. This is the received payments here, and here these invoices are selected 10 and 40, and here you will see that in the credit, previously we discussed the credit memo was created, and now this is journal entry, and you will see the 50 amount, and it will automatically amount would be the 0, and then this will be resolved. Accrued expenses and accrued revenue and deferred revenue, prepaid expenses, recurring and reversal journal entries, all these would be resolved in this phase. We shall discuss one by one these items. Accrued expenses are those expenses your client has accumulated but has not paid yet, like loan interest, account payable, and accrued expenses are liability that will be reversed when expense related to it is paid in the next period. So this is the main workflow. If you incur any expense, you shall record them, and at the month end you will reverse them. You can create an adjusting journal entries to record the payroll expenses that accrued for a current period but would not get paid until next period. To do this, set it up under the other current liabilities with the following lines: payroll expense debit, accrued expense credit. The accrued revenue, this also works same as accrued expenses. You record your revenue but these are not paid, then you shall need to reverse after the year end. Accrued revenues, or when a client has earned the revenue but haven't invoiced customer yet. And the common practice is in many industries that works on long-term contracts. Accrued revenue or as assets accounts, and as with the accrued expense, this can create a journal entry to record accrued revenue, and a reversing entry will be made the beginning of the next period. So you need to reverse after that. Deferred or unearned revenue. These occurs when your client has been paid in advance by a customers but has not earned the income yet. So for example, if a deposit is paid for a future event, or customer pays for a year-long subscription rather than paying month by month, so this appears on per balance sheet as an unearned income or liability. Prepaid expenses, you paid your vendors in advance, so you have not get any benefit. An example of prepaid expense: if the client pays for their insurance a year in advance, prepaid expenses appears on balance sheet as an assets. And prepaid expense, where the original purchase transaction goes to the prepaid expense, and adjusting would be debit to the actual expense and credit the prepaid expense. Recurring and reversing journal entries. Similar journal entries need making regularly. It's possible to set up recurring journal entries in QuickBooks. It's possible to create reversing journal entries. Recurring journal entries, select make recurring in the same transaction will need to be recorded regularly. You can give template name and decide the type of template. There are three types: schedule, reminder, and unscheduled. It depends upon your needs. You can then set the interval: daily, weekly, monthly, or yearly, when it should be posted, when the recurrence should start and end date. Setting the general gear setting recurring transaction to see the list of all recurring transactions, and including recurring journal entries. So this is a journal entry you have created and you want to schedule, or then you shall create as a recurring journal entries. Here the type would be the schedule, and days in advance, and identify the days, the dates, and after, starting date, end date, and occurrence, number of occurrence, frequency. And here this debit and credit amounts of insurance and prepaid expense. Reversing journal entry is also reverse journal entries, either by revisiting an existing journal account entry or by creating a reversing entry when the initial entry is created. To make a reverse journal entry, open or create the save journal entry as usual, and then select the reverse on the menu. It will automatically create a reversal journal entries. Whatever the debit becomes, it goes to the credit, and credit goes to the debit. This is main journal entry. An option to modify reversing description and date, but the date defaults to the first day of the next period, and default description is the same as the original entry. For example, you have created your adjusting entry on 31st December. The reversal would create on the 1st Jan. Cannot be modified. And journal entry, you will see here, this is 4, or it means fourth reversal entry here. The amounts and the heads would be the same. Description may be changed. So this topic is ended, and we shall see our first questions. When reviewing client's book, you find several invoices that need to be write off. Client uses accrual basis reporting, and invoices to be write off are in a closed period. How would you write off these invoices? So using a credit memo is a good option. Which of the following statement about journal entries in the QuickBooks are true? Journal entries cannot use multiple account. No, it's wrong. You cannot use product service. Yes, it's good. You can mark an amount as billable. No, it's wrong. Total debts must equal to credit. Yeah, this and this or correct answer. So our first topic is finished, and now we shall move to our next topic on next page. So next topic is prepaid and file 1099 forms. At year end, we need to be filed to the IRS. 1099 forms are filed at the year end every year after reaching to the specific threshold, and here we shall discuss what the threshold. You need to submit 1099 forms if you pay more than 600 for a service to someone who is not your employee. IRS required to comply the following 10 or more forms a year across W2, 1099S, and file them e-file. 1099 workflow makes it easy for your clients to prepare and 1099 NEC and miscellaneous forms by stepping 1099 miscellaneous is reporting payment like rent, prices that are not subject to self-assessment. Employment tax. NEC is for reporting a non-employee compensation that is most likely subject to self-employment tax. So these need to be filled for your clients. Let's take a look at W9 through an overview of stage before digging into the details. For 1099 filing, you need the information of your vendors whom you get services of 600 or more in a year. So for this purpose, you request your vendors for giving their information on a form that is called W9, and this is a process how you will get this W9 forms information and record in your QuickBooks and file your 1099 forms. So these are the options that would be relevant: collecting W9s, confirming company information, selecting account, reviewing recipients, preview and filing forms, refiling, and corrections. So these would be discussed one by one. The first is collection of W9s. In order to prepare 1099, you need to make sure collected information from vendor on W9. To save time during session, it's a good idea to collect contractor throughout the years. All vendor that you need to prepare for should appear in contractor tab of the expenses, and such as landlord. Here you can quickly see if any W9 is missing. You shall need to work with your clients to ensure the information is collected before 1099 need to be prepared. So there in the expenses tab, in the contractor, these are your contractors, and these are forms are filled and these are missing. Invoice confirming the company information. Now look at the first step of 1099 workflow. You can begin from either vendor or contractor page of expense. From there, either tab, prepare, select the prepare 1099 to begin the workflow. First thing you shall be asked to do is confirm the client company information that will be pre-filled but should be checked before you continue. If these details are correct, made and added that are needed, confirm information at the start. This is file 1099s with a head start. You will see verify your legal company name and tax ID below before filing 1099s, and let's wrap up your 1099 miscellaneous, and these forms are here. Company information, this is legal name and email and email address. Make sure that legal name is entered. One of main reason 1099 are rejected by IRS. Client's company name entered on 1099 does not match with the EIN number. So these information should be matched with EIN number. So worth taking the time to make sure that details are correct. Company names here should be your client's legally registered name that is found on SS4 forms at the time of registration. Selecting the account, the next you shall go to select the accounts that you have to use to pay the vendors and the contractor that require 1099. Here you shall select the accounts to view the list of all accounts for this client. Accounts used to pay the contractor and the vendors. You can select the accounts that have been used to pay vendors and the contractor. QuickBooks makes this easy by presenting the most common accounts used for this. At the top of the list, there are some reports that will help make sure you have covered all relevant accounts. Run reports of account used to pay 1099. Reports of all vendors' payments, and you can use these reports to get insight on which accounts and transactions be included in 1099 forms. Use the checkbox next to the necessary accounts to add them to your 1099 preparation. For each account, you need to specify which box on which form value should be added. Use the drop down next to each account to do this. Each account can only be mapped to one box or other form, but multiple accounts can be mapped to the same 1099 boxes. If you need to remove any account, use the transaction icon. Once the list includes all relevant accounts, you are ready to move on. Here are some accounts named 1099 box, and you will see the rent and leases. And others accounts you may also select there, and here you may see the non-employee compensation, and these should be selected. The next step is to check the detail of each recipient and the contractor that appear in the expense center. This is the next step, and you will see the correct for 1099 and their name, tax ID missing, and email address, TIN number, and you will see the reportable totals. You may edit them, and there is also the numbers. Reviewing and filing the forms. The next step is review these forms. You can see the list of 1099s you have prepared and preview link by recipient name, form itself, or use view summary button to summary of all 1099 forms. And you can back, this is preview forms. These are ready, these are filing complete, and here you will see the total miscellaneous one, the name of vendors here, and you can just preview here and continue to 1099 miscellaneous forms. There are some tips. Don't worry if you cannot get all of this done at one time. Your progress will be saved, and you have added will be next time you will select 1099. You shall be able to pick up the right where you left off. Progress will be saved here. Flexibility when filing. Once 1099s are completed, you have previewed forms, you are ready to file. If you are filing less than 10 W2 or 1099s, then you can mail them if you choose to. If you are filing 10 or more, you shall need to e-file them. This is a limit. E-filing including add-on contractor payment, deciding who pays, QuickBooks takes care of the rest. E-filing include if your clients have a subscription of payroll and contractor payments or bill pay, premium or elite, then the cost of e-filing 1099s through is included in their subscription fee. So this is very important. Payroll, contractor, bill pay, premium, elite, their fee is included. Others users will need to pay a fee per 1099 and e-file through the QuickBooks Online. If e-filing is part of your client subscription, you shall see continue to e-file and option of this stage. If they are not, then you shall be asked how they would like to file. So here these are the options. You may file continue to file. Add a contractor payment. If e-file is not included, you can choose e-file only, paying for just 1099 that you file. Add the contractor payment subscription, which might be best solution for your client if they mark as a lot of contractor. Decide who pays. You can specify whether it should be you or your client that pay for 1099 e-filing without impacting their QuickBooks product. QuickBooks will default to billing the accounting firms. If your client paying for 1099, the primary admin can select switch to client payment method. If the switch to the client payment method is stored, payment method will be charged, and there is no stored method, there will be prompt to add them. Reviewing your billing information here, you may switch on the client payment method here. QuickBooks take care of the rest. Once you have confirmed the payment method, QuickBooks will handle e-file and mailing the copies to the contractor you have submitted 1099. Refiling and correction. Finally, let's look of e-filing through QuickBooks, and you can handle the rejected forms or correction that are needed. Viewing submitted 1099 forms. Once you have filed your 1099 forms, you can see them in 1099 filing tabs and taxes center of your client books. Here you can see the status of all 1099 you have filed and will be pending, accepted and rejected status here. If any of your 1099 are rejected, corrections are needed to accepted 1099, don't worry, you can refill and make the correction directly in the QuickBooks. Refiling. If there is an issue with any of your forms you filed at same time, that will be rejected. If there is an issue with any of your firm, all 1099 you file at the same time will be rejected. And okay, this is the main thing. If there is a problem with your forms all would be rejected, and often because the name has been entered in the client's company, legal name does not match with IRS records, so these are rejected. You can see the status of 1099s forms in the 1099 filing tabs. An email will also be sent to the company email address as set to the company section of the account setting. Okay, next to fix the rejected 1099, select white forms. You can begin 1099 preparation workflow again, making sure to avoid same issues again. When you're done, you can e-file new 1099 without any additional cost. Filing corrections. If the IRS has accepted your 1099 but you are made aware that correction is needed after the filing, you need any corrections, then easy to handle. Your clients can get peace of mind knowing can e-file correction directly from QuickBooks for zero added cost. This is especially important in a light of IRS regulation about the 1099 correction in the same way as the original. Okay, this is the main rule. If you are filing your correction in the same way, there will be no cost. If you and your clients file the original 1099, and correction would be need to be filed too. For example, a vendor gets in touch with your clients to say that the total on their e-file was incorrect, and you get into 1099s in QuickBooks to e-file the correction. To file the correction, select correct next to the form you want to correct, and you shall see the only available forms that have been accepted by IRS. And if a form is still pending, You will have to wait until it is accepted before you can make any correction. Then be taken to the beginning of the 1099 workflow, and this time just for one vendor and contractor. So now 1099 form option is ended. Here we shall discuss the question. Your client has told you that one of their contractor has said they're mistaken on the 1099 that was refiled. For them it is not showing the correct total of payment company has made to them. How it can be corrected? The paper correction needs to be no. The clients must pay a fee for filing no. In 1099 filing tabs, text section, correct under this action and then complete 1099 again. You can e-file the correct for free. Next question is cost of e-filing through QuickBooks Online included with subscription fees. Some of these. There are these subscription included: QuickBooks Payroll, Contractor, Premium and Elite. Now we are going to start our third topic, that is budgeting, and we shall discuss the budgeting in advance. And budgeting is available in our plus and advanced version. And here we shall discuss our view of the workflow. Budgeting features available in plus and advanced and can be used pointing during the period, during the year. Don't need to wait until the year end. But if you have not already had this conversation, year end could be a good opportunity to discuss the client with you. Working with your clients, you shall be able to understand their goals, how they expect their business grow, and if they are expanding in a new areas, taking on new jobs, customers and hiring. Create budget can help you clients plan this and will allow them to estimate their projected income and help in projected over the period of time. Let's take a look on some steps which are required. First is setting up, creating budgets, reporting on budgets, using budgets versus estimates. Let's start first. Option A, setting up, how the budget is set up. Before looking to each step in more details, looks in the budgeting center, go to the budgets in the general setting and go to the budget and the financial planning in the left hand navigation bar. You will see here these are the budgets for the financial year 24 P&L and P&L consolidated. So import the budgets, create the budgets, and you will see the budget versus actual reports, and these will be shown here. Element setting we need to set up before setting up a. Here for this purpose you will go to the advanced tab of account and setting, and then you will make sure some changes. First month of budget will always be the first month of fiscal year that can be set. Your client fiscal year is set to match the calendar year. Any budget you create for them will start January. So here you can change your first month like Jan or July or September or like other things. Creating budgets. To create a new budget, select the create budget. You shall be guided through the steps needed. First thing, to determine which type of budget you are creating. Profit and loss counts and the balance sheet are two main types. Here you will see profit and loss budgets are greater for planning expected income. When creating a profit and loss budget in the QuickBooks, set the period from drop down, and budgets are created for 1 year at the time, but you can create as many as you need if you want to budget for several years. In the next step, as you shall see shortly, you shall be able to decide if the budget will be created by month, quarter or the full year, and whether it is consolidated, subdivided, or choose. If you want to subdivide, you can then set whether it will be divided by location or class or by customers. You can pre-fill the data from previous years or current year to date, or select the custom budget to create a budget from scratch. Balance sheet budget is also available here, and balance sheet budget are used by clients who want to project how things like purchases of fixed assets might affect their cash flows. And while balance sheet budget might not be for every client, they can be very useful for larger or more complex clients. When creating a balance sheet budget in the QuickBooks, set the period from the drop down. Set the default view. This can be set to monthly, quarterly, and yearly, and it can also be changed within the budget itself. You can only create consolidated balance sheet budget. How do you want to set up your budget? Profit and loss, balance sheet, this is period, default view, and that's on. Budget detail. Once you have set a budget type and setting, you're ready to dive into details. For adding details in the same whether you are creating P&L or budget or balance sheet, but there are a few differences to be aware of. Consolidated versus subdivided profit and loss. If you are creating subdivided profit and loss, you shall add in data for each of the subdivisions separately, and use the view budget for drop down to switch between subdivision. You can also use add subdivided budget for drop down to change their locations, class, or customers. Creating a budget for depending on which option are chosen during the first steps. There are no way of rolling all subdivided budget into one. So this is a main thing we should keep in mind. If so, your clients want to see consolidated budgets, you should create separately and making sure that the totals are matched. This is budget subdivided, this is period, and here you will see compare reference data actual, and the subdivided budget for multiples, and do the budget for customers here. This is consolidated and compare with 24. Profit and loss versus balance sheet. The main difference when creating a budget sheet that you need to make sure the balance sheet accounts balance. To help with this, status bar at the top of the budget shows you accounting equations, and warning the flag show in any column that does not balance. This shows you at a glance where issue might be. And importing the budget, it is possible to import the P&L budget that was created outside the QuickBooks. This is possible. When you select the import budget, you will be asked to set the time period budget is for, and is consolidated or subdivided. These two questions shall be asked, and you can download a template file that will contain the structure of your budget. All your budget is in one place. Downloaded budget template, upload the budget, and that's on. Once the budget have been created, next step of workflow is to run the reports on them. There are two reports types available in budget. These available from Budget Center, and as you saw above from reports. Let's take a look at budget overview reports. Budget overview is available for both P&L and balance sheet, and summarized budget by account can be a useful way of sharing a budget for review and approval the planning. Okay, budget versus actual reports. Available for profit and loss budgets, provide a comparison between budget and your actual account totals, showing how much you are under and over budget. When you select the run budget versus actual, the whole range of customization option appears in a header section, and you can switch between budgets report by selecting different option from budget drop down. If you're running report for the subdivided budget, each subdivision is shown in the report. Note all subdivision will appear in the report even if you have only created a budget for one of them. To view the reports for only subdivision you create the budget for, filter the report for the subdivision, for example. Using budget as estimates. So this is last and very important aspect of budget as an estimate. So there would be the 5 option that will be discussed in the details. You can take a step further, use the budgeting features that can be used in place of estimates to provide the more detail to prospective customer. For example, gardener may want to see how actual job cost compared to pre-projected estimate, and this is a main purpose. You can compare your projected estimates. Why not just create an estimate? How do I create estimate? What if the job spans more than one fiscal year, and how can estimate created from budget be shared with my clients' customers? How does my clients track against this estimate? So these are the 5 options and we shall discuss one by one. Why not just create an estimate? Your clients can create estimate in QuickBooks. In many cases, this will be enough for your client's need. There are some difference between creating estimate using budget that useful behavior of advising your client which is most suitable for them. Estimates are created using items and product or services, but the budget are created using accounts allowing to project your cost. So this is very important. So creating estimate is covered in sales and customers, and if your client is using project in advanced version, estimate is more complex, allowing to the inter project cost in the budget. How do I create an estimate using QuickBooks budget? To create detailed cost estimate to a particular job, create a new P&L budget subdivided by customers and select only customer that the job is for, and specify the customer job detail in budget titles and enter the estimate income and cost for job in that budget, split across month as required. How do I create an estimate using QuickBooks budget? If a job spans more than one fiscal years, what should we do? A separate budget will need to be created for each year. This is a main point, and separate budget versus actual reports will need to be run for each of the years. What if job spans more than one fiscal years? If a job spans more than one fiscal years, separate budget will need to be created for each year. How can estimate created from budget be shared with my clients' customers? If your clients want to send these projected costs to their customer, they can create a budget overview report, saving it with a more meaningful name as estimate overview. How does my clients track against these estimates? To use budget to measure customer estimate against job cost, run the budget versus actual report and rename it as estimate versus actual report. Don't forget to customize the report to filter the specific customer job. Save this report to monitor progress of the work regularly. Budget figures are same for both cash and accrual accounting methods. So if you want to compare the actual to budget for a project or see the cash flow impact, change the accounting method in cash. The question is, which type of budgets can you run budget versus actual report on? The correct answer is all profit and loss budgets can be run in a budget versus actual reports here. So that's all for today. We have completed our fourth video of month end review of level 2, and this is a detailed discussion. And if you have any question, please let me know at the comment section of this video. And also, please, if you have any query, you may contact me at my WhatsApp number. I shall be here to resolve you. And if you want to learn about bookkeeping and accounting, you may visit my YouTube channel Abid Financials, where you can find different series of the videos. Like, I have created videos for level 1 study material, level 1 answers, and also now we are ongoing level 2 study material series, and you will also find some practice question in their videos. Please subscribe my channel, and if you have any queries, let me know. I shall resolve as soon as possible. Thank you for watching this video.